Howdy, everybody. Welcome to the Liberty Call. Today is Tuesday, May 27, 2025. Hope you're having a fantastical day out there on the interwebs, and hope you had a good weekend. We had Memorial Day yesterday, so hope everybody had fun. It was rainy here all weekend, so it kind of sucked. So it's beautiful today. Sun's out. I mean, ground's kind of squishy from 3 days of rain, but hey, we got hail and all sorts of stuff. So pretty much just sat inside and watched baseball, did some house cleaning and stuff like that. So anyways, all right, well, let's get to the important stuff. Markets roared back from the long weekend after President Trump hit the brakes on his 50% EU tariff threat. The Dow jumped over 700 points. Yep, finished that way. With tech leading the charge, NVIDIA and Apple both surged. Treasury yields cooled. Crypto buzzed with Trump Media's $2.5 billion Web3 play. And Tesla rebounded despite EU pressure. For now, it's risk on, but let's not forget who's holding the matches. So before we break all the amazing news down, I need some help from you. Give me some thumbs up, like, share, subscribe, and follow, and press that darn notification bell, folks. All righty, well, let's get to the markets for today. Dow Jones finished the day up 1.78%, 740 points, closed at 42,343. S&P 500 up 2.04%, 118 points, closed at 59.21. NASDAQ up 2.47%. Woo, big jump. 461 points, closed at 19,199. The VIX fell today 7.24%. It's at 1908. Canada up 0.75%. Brazil up 1.03%. And Mexico only up 0.12%. In Europe, Germany was up 0.96, the UK up 0.69, France down 0.02, the Netherlands up 0.56, Spain up 0.13, Italy up 0.34, Switzerland up 0.18, and Portugal down 0.02. Russian exchange is green today. The MOEX up 1.43, RTSI up 1.48, and the overnight markets, the Nikkei in Japan was up 0.51, Australia up 0.56, New Zealand up 0.41. In China, a little red here, the Shanghai down 0.18, Shenzhen Component down 0.61, China A50 down 0.53, DJ Shanghai down 0.31, Hang Seng up 0.43, and the Taiwan weighted when it closed on the 26th was down 0.53%. All right, so those are our markets. Everybody feel smarter out there? I know I do. All righty, well, let's jump into our weekly economic update. Stocks moved lower last week on fiscal fears and fresh tariff threats loomed over market sentiment. The S&P 500 fell 2.61%. The NASDAQ dropped 2.47%. The Dow Jones Industrial Average slid 2.47% also. So it looks like the NASDAQ made up the entire, well, no, not really. Because if you go down 2.47, then you go back up 2.47, you don't wind up in the same spot. And overseas stocks advanced 1.14% last week. Stocks slip. On Monday, stocks were under a bit of pressure after credit rating agency Moody's downgraded the U.S. as an insurer of government bonds. Stocks remained under pressure midweek as Treasury yields moved higher with the 30-year bond with the 30-year bond hit a 19-month high. I would say win probably. Investors fretted about the budget deficit. Some feared the deficit would be made worse by the spending bill winding its way through Congress. After the House of Representatives approved the bill, bond yields backed off their highs and stocks went sideways. On Friday, stocks dropped after President Trump warned of a 50% tariff on European goods following an apparent stall in trade negotiations. At the same time, the administration also threatened a 25% tariff on any iPhones manufactured outside of the United States. All right. Unexpected tariff news. The president's fresh tariff talk ended a week or so of relative tranquility on the trade front. While the EU tariff threat may end with a deal similar to the deal with other countries and regions, the iPhone issue may prove stickier. Some analysts estimate that making iPhones in the U.S. would increase manufacturing costs by as much as 50%. Oh my gosh. Which might increase the price of the iPhone. Oh no, that's just the way it is. All righty. Key economic data this week. Monday, market was closed. Tuesday, today, durable goods, New York Fed President John Williams and Minneapolis Fed President Neil Kashkari are speaking. Also, the Case-Shiller Home Price Index and consumer confidence. Wednesday, the FOMC Market Committee meeting minutes. That is always exciting to read. And Neil Kashkari is speaking. Thursday, we have GDP, jobless claims. San Francisco Fed President Mary Daly and Chicago Fed President Austin Foolsby will be speaking. And the Fed balance sheet and pending home sales. Friday is the Personal Consumption and Expenditures Index, International Trade in Goods, and the Atlanta Fed President Raphael Bostic and Austin Foolsby will be speaking, followed by retail and wholesale inventories and consumer sentiment. Just a few companies reporting earnings this week. On Wednesday, we have NVIDIA and Salesforce. Thursday is Costco and Dell. All righty. So that is everything there. Let's hop into our market recap. S&P 500 surges as consumer confidence rebounds. Trump delays EU tariff hike. All right, U.S. stocks surged on Tuesday, bolstered by a sharp rebound in consumer confidence and relief from postponed trade tariffs. The S&P 500 rallied after a long weekend with upbeat economic sentiment reversing some of last week's losses. Consumer confidence rose by the most in 4 years, breaking a 5-month slump. The Confidence Board's index jumped 12.3 points to 98.0 in May, surpassing expectations. The expectations index surged 17.4 points, while the President Simulation Index also improved. Optimism was already improving ahead of the recently announced U.S.-China trade deal, which appears to have boosted sentiment further. And before you get too excited, that deal is not, it's just a pause right now, so I'm not sure why everyone's all excited about it. They haven't finalized anything. Tech stocks led the charge. NVIDIA climbed 3% ahead of its earnings, expected to showcase strong AI-driven demand. Tesla soared more than 6% after Elon Musk reaffirmed his commitment to Tesla and XAI. CoreWeave jumped over 16% despite a downgrade, and Salesforce gained amid reports of a pending $8 billion acquisition of Informatica. Southwest Airlines made headlines by ending its free checked bag policy, while Okta's earnings were due after the close. Markets were also lifted after President Trump postponed a proposed 50% tariff on EU goods until July 9th, following discussions with EU President Ursula von der Leyen. She's a peach. This calmed trade tensions that had unnerved investors last week. However, economic uncertainty lingers. April durable goods orders dropped 6.3%, dragged down by a 17% plunge in transportation equipment. With the economy sending mixed signals, Fed officials, including Neil Kashkari, are advocating for holding interest rates steady amid unresolved trade issues. Investors now await more commentary from Fed officials for clues on rate policy, particularly given recent volatility in economic data and Trump's unpredictable trade tactics. Overall, the market's rebound reflects cautious optimism amid policy uncertainty. Well, anyone who's been paying attention to this show for a while knows, my expectation. I think the markets are going to take a bit of a dip here in the near future, and would not be shocked if that occurs. All right, got a research report here, or a data report. April durable goods orders from First Trust. Mr. Andrew Opdyke put this together, so let's read through his report. New orders for U.S. durable goods dropped sharply by 6.3% in April, but the headline figure masks a less alarming reality. The steep decline was largely due to a pullback in highly volatile commercial aircraft sector, which had surged in March due to airlines rushing orders ahead of expected tariffs and President Trump's Middle East tour yielding major Boeing deals. These fluctuations are expected to normalize in future reports. Excluding transportation, durable goods orders actually rose 0.2%, with gains in computers and electronics up 1%, machinery up 0.8%, and fabricated metals also up 0.8%. However, slight declines were seen in electrical equipment, down 0.2%, and primary metals down 0.1%. More crucially, core capital goods shipments used to gauge business investment and influence GDP fell 0.1% in April. If flat in coming months, this would imply a modest 1.8% annualized growth rate in Q2. Adjusted for inflation, real growth would be negligible. Core orders declined 1.3% in April, and they're down 6.1% on the 3-month annualized basis, signaling potential weakness in future business deliveries. Amid ongoing tariff threats and a shifting policy landscape, volatility in economic data is expected to continue, complicating business planning and investment. The Federal Reserve is unlikely to change rates in June, but growing economic softness and unemployment concerns may lead to cuts later in the year. Meanwhile, home prices slipped slightly in March. The Case-Shiller index fell 0.3%, and the FHFA index declined by 0.1%, though both remain up year over year. This marks the first monthly decline in both indexes since 2022, but modest gains are projected over the coming year. All right, so not all terrible. All right, got one last article here. It's the Monday Morning Outlook from Mr. Brian Westbury, First Trust. This week's article titled Debt Downgrade Drama and the Budget. Let's see what Brian had to say. Moody's downgraded U.S. government debt on May 16th from AAA to AA1, and its second highest credit rating, citing the nation's $36 trillion and rising debt load. The move, although heavily covered by financial media, had a muted market impact. The 10-year Treasury yield rose only modestly from 4.43 to 4.51, and the 30-year increased from 4.89 to 5.04. The yield gap between the 10 and 30-year Treasuries widened over 50 basis points, but that remains within historical norms. The downgrade follows previous ones by S&P back in 2011 and Fitch 2023, neither of which led to major market disruptions. Moody's decision is being weaponized politically, with critics targeting Trump and Republicans for pushing tax cut extensions from 2017. Moody's argues that such moves are fiscally reckless, increasing deficits and debt burdens. However, critics of the downgrade note that the fiscal trends, massive post-COVID spending under the Biden administration, were largely ignored until now. Strange. The House passed the Big Beautiful Bill, reportedly includes meaningful deficit reduction. The Tax Foundation estimates it would cut $1.9 trillion from deficits over a decade. So really, that's more like $200 billion per year. Nothing to really jump up and down about compared to a simple tax cut extension. The bill also includes entitlement reforms and spending cuts, especially targeting non-defense discretionary outlays, with proposed reductions of 32% for fiscal year 2026. Despite historically high tax revenues, the federal deficit now consumes 27% of total spending, up from 6% in 2007. While a balanced budget may be out of reach, stabilizing debt relative to GDP is achievable by reducing spending, which could unleash private sector growth and tax revenues. Similar to the Clinton-era surplus trend, the Senate's role in shaping the final bill will determine whether real fiscal reform materializes or political inertia continues. I'm going to take a guess here. They're going to do nothing that actually helps bring down the debt, reduce the deficit, or first you got to reduce the deficit before you can pay down the debt, because you got to have a surplus to pay off the debt. Crazy, I know. I mean, personally, I would fire everyone who's not in an agency not outlined in the Constitution. So that pretty much means anyone not employed by the Army or the Navy, or a few small government agencies like, Immigration and Customs and things like that. Everybody else, you're fired. Sorry, you're in an illegal job in the first place. You shouldn't be working for the government. Or if you want to work for the government, go find a state to go, mooch off of. All right. Well, that is everything that I had to cover for today. Was this not the most amazing weekly economic update that's ever been covered? I think so. Anyways. All right. Well, if anyone needs to get in touch with me, where do you want to go? Doodle-doo-to-do, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be glad to help. Hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.